If you audit local governments, then you're familiar with governmental funds. In governmental funds, we contrast those, say, with like a proprietary fund. In governmental funds, we use modified accrual basis of accounting, and that's what I'd like to talk to you about now. Let me go ahead and contrast modified accrual with full accrual. And modified accrual on the revenue side, you only recognize revenues when they are measurable and available. I'll explain more about that in a moment. On the full accrual accounting, say like in a proprietary fund, you recognize revenues as they're earned. There's no availability criteria. So let's go back to the governmental funds such as a general fund or special revenue fund, and let's talk about modified accrual accounting. So we just said for revenues, we're not going to recognize those until they're measurable and then available. Now the other thing you'll notice about modified accrual in terms of revenue, the revenue has to be earned just as it is in full accrual, but even if it's earned, if it's not available, if the money's not available, then we're not going to recognize it. So that's how it's different from the full accrual accounting. So think about property taxes. That's probably the most common revenue example for modified accrual basis of accounting. So if your government has earned that revenue, let's say there's a $50 million property tax assessment. We get to the end of the year, and let's say that in the 60 days following the end of the year, so let's use the June 30 year end as an example. So in July and August, let's say the government collects $1 million in relation to property taxes that they had earned, then we would recognize that $1 million as of June 30 as revenue in the financial statements. But let's say there's another $3 million that was not collected in July and August. Maybe it was collected in September through December. That remaining money would not be recognized as revenue as of June 30. That would be deferred on the balance sheet. So that's how that works with modified accrual accounting in relation to revenues. Let's talk about expenditures. And notice I use the word expenditure, different from expenses. We have expenses in full accrual accounting. We have expenditures in these governmental funds. So not a big deal, but just something to note. On the expenditure side, when we're looking at modified accrual basis of accounting, we're going to accrue expenses as they are incurred. And really, it's not different from like full accrual accounting. That's how you do it over there. So what I'm saying to you on the expense side, it's just like what you would have say in a proprietary fund where it's full accrual. In the governmental fund, it's, for the expenditures, you're going to accrue whatever you incur by the end of the year. So here's an example. You get an invoice, you receive the invoice, we'll go back, use the June 30 year end. You receive the invoice July the 10th. It's for $50,000. The services were provided on June the 27th. Well, you would go ahead and accrue that $50,000 expenditure because you've incurred it. You legally owe that amount as of June 30. So even though you didn't get the invoice until after June 30, you're going to accrue that expenditure as of June 30. Credit accounts payable, debit expenditure. So again, this is really not different than what we would do under full accrual accounting. The main difference in modified accrual basis of accounting is on the revenue side, and specifically in relation to availability. Now, one thing to note about availability, we commonly use a 60-day time frame beyond the balance sheet, the end of the year. We use 60 days to recognize revenue. You can use a different time frame in regard to some revenues. I'll let you do more research about that, but some governments actually use 60 days for some revenues and like 90 days for others. The main thing I'm saying, I'm repeating myself on purpose, is under modified accrual, revenues have to be measurable and available. The measurability is usually not an issue. Availability can be. So if the government receives monies beyond that 60-day time frame, if that's what they're using, then we're not going to recognize the revenue at the governmental fund level. Now, once you go to the government-wide presentation for governmental activities, well, there it's full accrual. And so we're not using modified accrual basis of accounting at that higher level, the government-wide presentation. That's full accrual. If you're new to governmental accounting, yes, this is confusing, but that's how it works. If what I've said is unclear, I'll refer you to the blue book that the Government Finance Officers Association puts out. That'll give you some more details about what we discussed today. But hopefully this helps. Until we meet again, take care and bye now.